Great.
हेलो चालू नहीं हो रहा इसमें आवाज नहीं हेलो ओके I welcome you all to our second session for today. We have with us CA Kinjal Bhuta. She is a very seasoned speaker on income tax matters. She will be explaining us all the recent developments and the practical issues that come up in the field of reassessment. To introduce our today's faculty, I will invite CA Seema Mehtaji, who's a past convener and core group member.
Hello, good afternoon. Welcome to the second session. The topic for the second session is income tax assessments, reassessments, recent developments, and practical issues. Today we have with us CA Kinjal Bhuta. Kinjal Bhuta is having working experience of 15 years in the field of direct and indirect taxation and international taxation. Currently a tax litigation practitioner and does representation at ITAT, DRP, CIT appeals and other authorities. She has authored 2 publications, one on practical guide to faceless assessment and appeals by Bloomsbury Publication House and presumptive taxation under section 44 AD, ADA, AE and by BCAS. She is managing committee member of BCA Society and a core group committee member of direct tax committee. Convener of Seminar and Membership Development Committee of BCAS. Co-editor of Bombay Chartered Accountants Referencer since last 10 years. An annual flagship publication, BCAS, and the contributor to annual budget publication. Kinjal contributes various articles to tax journals like BCAS, Chamber of Tax Consultants, AIFPT, etc. And is a regular speaker at various platforms of professional importance. She writes a monthly feature of ITAT decisions in the Chamber Journal. She has awarded with the Rising Star Award 2022 in APAC region for category of tax dispute resolution by international tax reviews. With this brief introduction, I invite Regional Council member CA Pinky Kedia, Mahesh ji, Vadia ji and Chajet ji also can join to present a memento to CA Kinjal. Thank you. The dais is yours, Kinjal.
ओपन पीपीटी को शेयर किया ना इसको ओपन
Good afternoon, everyone. So as you see, we've already taken the second slide. So this was supposed to make my today's coverage. It's quite exhaustive and promising to be completing in 1.5 hours or maximum 2 hours if Purvi gives me. But I'll try my best to complete whatever is possible. The last, so basically the idea of, having this session when I was discussing with Purvi was that reassessment provisions, as we all know, obviously, that there's a lot of change which has happened in last 2 to 3 years. But more importantly, there is a change every year which is happening by way of amendments in the finance bill. Apart from that, there are changes which are happening even on almost every day-to-day basis, where we are receiving almost orders from, there are several writ petitions which are being filed before high courts, before Supreme Court. And this is quite a litigative space since last 1 year, I would say, probably rather 2 years since we have received a Supreme Court decision of Ashish Agarwal. So basically, directly jumping into issues would be really unfair because we might not understand the intricacies of law. And that is the reason I'll probably take most of the time. I think half of the session would be understanding the law threadbare, basically line to line, and comparing it with the earlier provisions so that we can understand and see that what issues are coming up and how do we cope about it. So obviously all issues don't have a solution, unfortunately, but at least we'll be able to find out that what is the best course of action if we face that kind of an issue. So let me directly start. Just a minute. Okay, so brief changes of the new reassessment regime. So I'm going to cover the all the sections right from 147 to 151 in detail. But if we make a broad comparison of what is the new regime, so the new regime is applicable from 1st April 21. That is when the law was changed. So that is when all the earlier sections were replaced by the new sections. So it obviously we know that reassessment provisions earlier had a time limit of 4 and 6 years and 16 years. So 4 years we had, in case where the assessee is basically not filed a return of income, or basically where there is no assessment which has happened earlier. So that was the 4-year period, and there was a pecuniary monetary limit. Then for serious offenses or cases, there was 6 years, and for 16 years for foreign assets or any other foreign issues, basically with respect to non-resident assessees. Now this has been made from 3 to 10 years. There is no third limit of 16 years. So basically a kind of a silver lining that for foreign residentials or NRIs or companies, it has dropped from 16 to 10 years. So basically now we have only two limits of 3 and 10 years. One of the most significant changes which has happened in reassessment provisions is that the search and seizure assessment provisions has been clubbed with the reassessment provisions. Earlier we had, block assessments, and we had section 153A to 153C, which determined that how an assessment has to be done when there is a reopening. So when there is a search and seizure at the place of the assessee. So now these provisions are clubbed because at the end of the day, I think it is a reassessment, whether you are doing based on any information or any reason, or whether you are doing based on any search or seizure. At the end of the day, it is a reassessment of that particular case. And that is why to probably, to do away with the complications, they have clubbed the provisions together. Whether it has been simplified or not, that is another thing. I think that we'll consider later. So to disclose certain terminologies which they have, eradicated or removed, is that to disclose fully and truly all material facts. So basically one of the reasons, which in the earlier provisions, where the reopening could happen only when there were no true or material facts which were given by the assessee, or whether there was any failure on the part of the assessee, those things have been now removed. So in short, it is not something very subjective. They have tried to streamline and make the procedure the way it is only information based, not subjective from the assessee also, and not subjective from the assessing officer's side also. Reason to believe I think we all have over obsessed over this terminology since last 15, 20 years. That reason to believe, change of opinion. We have been doing case laws on all those things. That has been completely replaced with information. Now, what is information? Again, I'll get back to that. There was an earlier decision of Supreme Court in case of GK and drive shafts. Now, that decision was a landmark decision in case of reopening proceedings, which laid out step-by-step procedure of how a reassessment has to be done. Now, based on that, it was found that, lots of assessees, they used to file several appeals, several writ petitions, and the litigation was ongoing because certain technical formalities were not met by the assessing officer. And that is when they decided that they will probably bring whatever has been held or whatever has been given by the Supreme Court in the Income Tax Act itself. So they kind of tried to incorporate the Supreme Court decision by way of making amendments, and Section 148A is a produce of probably the Supreme Court decision. Sorry, GK and drive shafts. I'll give you the citation. I've not mentioned here, but now, coming to analysis of the section. So section 147 is the main section, which allows the assessing officer to reopen. So it says that any income chargeable to tax has escaped assessment. AO subject to section 148 to 153, assess, reassess such income or recompute loss or depreciation or any allowance deduction for such assessment year. Now, there are multiple things which we need to find out in these 3 lines. So basically, one of the most important change which they have made. So the earlier section 147, it used to start with if the assessing officer has reason to believe that any income chargeable to tax has escaped assessment. So first, the onus or the cast of onus was on the assessing officer to basically have a belief that there is some escapement which is made by the assessee. That words are not here. It starts that any income chargeable to tax has escaped assessment. So basically, what does it do? Does it widen the scope or does it, restrict the scope? So, yes. So yes, there are 2, thought processes. But if you ask me, it basically restricts the scope. And the reason is that reason to believe is much wider than compared to having a concrete information that there is escapement of information. And they wanted to do away with the specific discretion which was given to the assessing officer, because earlier, if they receive some property which the assessee has purchased, suppose there's some property which has been purchased and there is no return of income filed by the assessee, they have reason to believe that there is no source which has been explained since no return has been filed, especially in case of NRIs, because most of the NRIs don't file returns in India because they don't have any source of income in India. And in such cases, wherever there is an asset which has been purchased, they have a reason to believe that since the source has been not explained, there is escapement of income and there has to be 147. Now, they have made it very specific that there has to be some escapement which is there and it is chargeable to tax. So basically, although practically, unfortunately, I have seen them working in the same fashion as it was earlier. I think somehow they have still not come to terms with the significant changes which has been made in the new provisions and the reasons why these changes were made. So basically, right now, if you see, it's like kind of an hybrid situation where they are using the earlier provisions, they are using the new provisions just like a formality. However, the mindset is as it has been ingrained since last 20 years. They have been continuously doing that. But this is one of the important parts to find out. And that is where the significance of escapement comes into. That what is escapement? Whether that escapement has been recorded by the assessing officer while making issuance of notice under 148, that is a critical change which has been done vis-a-vis earlier proceedings. Another thing is they have included 2 things, assessment, reassessment, and recomputation of provision, and recomputing any loss or depreciation or any allowance. For that matter, the wordings are almost similar. The only difference which I see here is that, and there are quite a few changes in the words which they have made. Ideally, if they are changing the procedure, except for the procedural part, mostly what we have seen in the past is they keep the language same, but here they have tinkered with lot of words, and some of the things are thought provoking, that what is the reason behind making such additions or such deletions. So one of the thing which is added in the 23 or in the 21 Act is that apart from any other allowance or depreciation, there could also be any recomputation of deduction. The word deduction was not there earlier. Now, one of the reason could be, so one of the benefit of doubt we give is that basically there was no thought process while bringing this word into the act, considering that it would just have been going hand in hand with allowance. The another reason could be that there are a lot of decisions wherein deductions are claimed by the assessee at the reassessment stage. So, many times there are several decisions, probably of lower benches, tribunal benches, wherein they say that if the assessee has forgotten a deduction to be taken in the return of income, and there is a reassessment which happens, and the assessee decides to take the deduction, whether the assessee can do or not. So there are decisions which says that assessee cannot do that. Why? Because assessee cannot use the reassessment proceedings to his benefit. So other thing is, obviously we had various decisions of High Court and Supreme Court saying that deductions cannot be claimed in the revised return, or it could not be claimed in the reassessed return. So here, when they are themselves bringing up the word deduction, probably the intention is that they want to reduce with the uncertainties, and probably the assessee is given a benefit of doubt to allow the deductions and recompute the entire return of income. And in case if there is a reassessment, so everything said and done, whether they allow or whether they don't allow, the prima facie opinion should be that if you have forgotten, apart from all the litigation, you need to claim the deduction. Whether they allow or not, that is a secondary part, and that is the litigation. Correct. Correct. So it's both the ways. Sometimes it is allowed, sometimes it is not allowed. There is litigation which is persisting in that, but most of the times we see that they do not allow. One of the reason why they have started recently allowing is that the entire process is now become electronic, right? So when they are making the computation sheet, they are making on based of the return of income which we have electronically filed in pursuance to notice under section 148. Now in that, if you are claiming, they basically don't see or look into that. They use the same FUV or the same Java file which you have uploaded, apart from just making the additions. So this is also one of the reason that probably it is also allowed because they have overlooked it or not considered it at all. But yes, it is a mixed bag right now, but this could be one of the reasons. And if we go by the law precedences of the past, it is a cardinal principle of law that any word, whether it is added or deleted, has a reason why it has been added or deleted. And if we go with that logic, then probably it has to do something with the deductions which can be claimed later on by the assessee. Now, one of the another important aspects which has been changed, obviously, what is the controversy issue? I will get to when we go through those slides. But the earlier law, the wordings which they used to use is, I just read that part so it can be more understandable, that the assessing officer shall assess or reassess such income, and also any other income chargeable to tax which has escaped assessment and which comes to his notice subsequently in the course of proceedings. Now, what does it mean? It means that not only the assessing officer has the power to reassess something which has been recorded in the reasons, but it also has the powers to add anything else which comes to his notice during the assessment. So basically, they gave those powers in the section itself, in the earlier section. That word "and" also is missing from section 147 in the current provisions. However, they have added an explanation, which I have added here, that any subsequent issue which comes to the notice of the AO, even though section 148A is not complied with, the assessing officer can make an addition. Now, one would wonder that why they would remove the word and also from the main section, because that is kind of a charging section, which says and gives the scope of what the assessing officer can do. So if it is given in the main section itself, then what is the reason of removing that and putting into the explanation to section 147? So basically, so I think I'll just discuss the issue here itself rather than postponing it to the future slides. So one of the reason which we feel is here is that we had a decision earlier. We have decisions of Asian Paints and Jet Airways, both are Bombay High Court decisions, wherein they had specified that suppose if there is a issue, let me give you an example, that suppose the reassessment has been initiated for making an addition under section 50C, which is the difference between the stamp duty value and the agreement value. So if the reopening has made because of that, now in the course of proceedings, the assessing officer felt that no, there was a DVO report which happened and the value has come at par. So there is no addition which is required under section 50C. However, the assessing officer, when asked for several details, they came to know that the cost of acquisition, there is no agreement which has been provided. And since the purchase agreement has not been provided, he wants to add the cost, he wants to not give the credit of cost of acquisition and then compute capital gains. Now, under the earlier provisions, could he do that? Could he not make any addition under section 50C, which was the original reason of recording, but make an addition on case of cost of acquisition? He could not do. Because why? Though there are powers, but it says the word and also is very important. When you say and also, it means that you can do this and also this. That means you have to do both, or you don't either. But you cannot drop what you had initially transpired into your mind at time of reasons recorded. You thought that this case is for 50C, and then you can't go on and keep on making fishing and roving inquiries and make some other additions. So you have to make the principal addition, and then with that you can make any other addition. So, and we had, this matter had gone into litigation. So it is a quite settled situation in the earlier law that they cannot make an addition, any other addition, if they have dropped what was the required to be made under reasons recorded. However, with deleting this word and also, does it mean that now in a situation, suppose, see there is an explanation which is given. Now this explanation to section 147 was there in the old law also, and it was there in the new law also. The explanation is more or less same. There is no change in the explanation which has been made. So explanation gives powers to the assessing officers to make an addition of anything else. So that means the scope is widened. They don't have to be limited in their scrutiny. They have to, they can go and ask everything and anything, and you are obliged to give those details, and he can make addition. But now the question is that since they have removed these words, does it mean that in the same example, the assessing officer is not making any addition under 50C, but is making addition on other grounds? Suppose, let us leave cost of acquisition. Suppose he found something problem in your business books and he wants to disallow some expenditure, which is personal according to him. So whether he can drop 50C and he can make an addition under personal expenditure, as to my mind, yes, that can happen. For the only reason is if you literally construe the words which are there under section 147, because there is an explanation, the words which has been removed, and explanation says that any subsequent issue can also be done. However, the decisions which are there of the past, I think they continue to hold. So if you see, there are a lot of changes which they have made, as I earlier mentioned, in the language. So many times what happens is when you read the section as a whole, it doesn't make sense to take such a decision. But if you literally construe each and every line, then probably the logical rationale is that he can drop the original position which he had taken and make any other addition. And with this, they gave a lot of powers to the assessing officer. And what another thing which happens is that the assessing officer, by doing this, is not made responsible for his actions for reassessment. Reassessment provisions under the Income Tax Act has to be considered quite serious. It cannot, every assessee cannot be expected to maintain the books of accounts for 10 years. Now that the time limit has been increased to 10 years. So if you are, basically the actual word is harass, if you are harassing the assessee, to ask details for the past 10 years, then it has to be something very rigid and something very much relevant to be made. You cannot just drop it and then, make any other addition and start opening the entire assessment altogether. But this is the provisions which we are discussing here. So this is as it is. I couldn't find any, since these provisions are quite new, right? This is just 21, 22. Most of the litigation which I could find while I was making this presentation were writ petitions filed before High Court, because these matters are still to be tested in courts of law. They have still reached the CIT appeal level. CITs are not disposing appeals, as we know. So it is just stagnant as of now. So we don't know what is going to be the interpretation, but this is what it seems with the section. Now coming to section 148. So 147 is giving powers to reassess, assess, etc. Now what is 148? We know what is 148. 148 is a section which empowers the assessing officer to issue a notice. So normally we receive a notice under section 148 whenever there is a reassessment which happens. There is obviously a significant change which has been made in section 148, and there is a new section which has been added, which is 148A, which I already talked about. So 148 says that subject to provisions of section 148A. What is 148A? It is a procedure laid out as to how prior to reassessment, what are you supposed to do? So that is basically, that is procedure under section 148. AO shall serve notice with the order passed. Order means 148A subclause D order. We will come to that. If required, the reason of if required is every case, there is no requirement. Every case doesn't require to pass an order under 148AD, because there are certain exceptions under the section. In certain cases, the assessing officer can straight away issue a notice under 148. He is not required to do the procedure before issuing issuance of notice, and that is the word if required. After that, always the procedure used to be that you had to file return of income when you receive the notice. So earlier we know that we had 30 days period. 30 days period was not written anywhere in the earlier law, but that was normally asked by the assessing officer that you are required to file the return within 30 days. Now they are requiring it to file within 3 months from the end of the month in which notice is issued. Now, this is a recent amendment which was made in the Finance Act 23. Earlier, they had mentioned that as per the discretion of assessing officer. So if the assessing officer is telling file within 7 days, you have to file. If the assessing officer is saying file the return of income within 30 days, you have to file within 30 days. Now they have made it, so basically they will standardize the procedure and they have kept 3 months. Now, one thinks, why 3 months to file the return of income? Because earlier we used to file within 30 days. So it just came up to my mind that why would have they enhanced the limit by 3 months? I think the reason of doing this by 3 months is that whenever there are a lot of administrative issues. One of the things is that since they have been reducing the time limits of making assessments, in lots of cases, the due date to issue a notice under 148 and the due date to issue notice under section 143(2) for a normal assessment used to coincide. And the assessing officer used to not get enough time to cope up with all the notices put together, because the reassessment and the actual assessment used to normally happen together. And that is the reason that this is one of the reasons that why they've made 3 months. Another reason is probably that since 148 notice now is issued after the entire procedure of 148A has completed, which means that they issue notice, you reply, they pass an order, then they issue you a notice. So one, it empowers the assessee to file a writ petition against the order which is mentioned under section 148A subclause D. So basically, if by that time you want to file a writ petition and it is still pending, so whether they'll be able to, so the matter is stayed for issuance of notice under section 148. Second could be probably the assessee could rework based on, because when you are aware that what is going to happen, you obviously had a preview by the assessing officer that this is what he's looking for and this is what he's looking to add, because it has been categorically made informed to the assessee by way of information given. So it gives a chance to the assessee to think, ponder, and see if you want to accept it in the return of income only and close the matter there. So obviously it doesn't close there. The reassessment will still go on, and the assessing officer, remember, has powers to ask any other things. But in most of the cases, it might just pass the assessment order if you have accepted that in the return of income. This could be the reason. There could be no reason also. Probably they just wanted to give more time and not rush into things. Yes. Yes. In the recent. Yes, but it is updated in that. So they have mentioned in that. So one of the reasons is that I don't know, but this is with effect from 1st April 23. So you must have received, if notices before that, then it would be 30. Okay. Okay. Yeah. So surprisingly, we just received a notice a month back where they gave us 15 days. So we were wondering that why 15 days. So as I mentioned at the start, they need some kind of training in reading the provisions and then doing, probably. Yes. And the tab closes. So it's all electronic, so you can't do anything further. So in such cases, this is a practical issue, and in such cases, what happens is, unless once you don't file the return and there is an addition, then whenever the assessment order is finalized, there will be huge 234A interest because you delayed in filing the return. That is what they would say. And when you're not allowed to file the return because the window is closed and the act allows you, then in that case, what do we do is, whenever there is the first notice which has been issued, we can't file it on the portal, but we give our objection under protest and say that we are not allowed to file the return, though we are ready to file the return. Another thing which we have tried, which sometimes works, is that we file the return physically before the jurisdictional assessing officer and get a stamp from them that we have filed the return within 3 months, and therefore there should be no 234A interest, and there should be no 271F penalty also for non-filing of return. So these are the two things which you could probably do if the time limit is expired. Yes. 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 No, so now that the law says, if section 140, correct. So you are not required to file return under section 139, but you are required to file return under section 148. No, so there is a change. No, there is a change with respect to even 143(2) issue. I'll take it in the issue. I've taken it up, but see, these are two different returns altogether. So even if you are not correct, but just because there is an other provision which is telling you to file return, that doesn't mean it is overriding the earlier provision. It doesn't mean that 148 is overriding section 139. No, it is not overriding. That's what I'm telling. There are two specific provisions. See, if there was a search and seizure, let us take a situation if there was a search which had happened. Were you supposed to file returns? Yes, you were supposed to file returns. So this is just similar to that. So you are required to file. And another thing is, even if you go by interpretation of tax laws, specific always prevails over general. And since section 140 is a specific section, it will always prevail over section 139. It will not override, but it will prevail over section 139. So now there are 3 provisos to section 148. First proviso, that no notice to be issued unless there is information with AO to suggest. Now, whatever I have kept in bold are very important words and are going to, be quite in vogue in, I think, for next 1 decade, where entire litigation and argument is going to be around these words. That what is information? So basically, the assessing officer should have information first. That information should suggest that there is an escapement of income, and the assessing officer has obtained approval of specified authority. So there are 3 conditions before you issue notice under 148. First is you need to have information. Second, that information should be suggestive that there is some escapement. And third, that there is approval. Now, right now, what we have seen is what is happening. There is information. There is approval. The second part is always missing. They are just not, because that was not there in the earlier law. There was reason to believe, and reason to believe, as I mentioned, is quite subjective, right? Now, what I believe and what you believe can be totally different. So assessing officer will believe everything is to be added. So that is what it was. So there was never application, although we used to stress upon the words application of mind, but the assessing officer never used to apply mind while recording reasons. But here, since it is there in the section, there is a link which has to be there between information and escapement. Only if there is information, it doesn't mean there is escapement of income. And if the information which is given, and what is important is the document which gives information. See, most of the times when they are giving you information, what do they write? They suppose, giving the same issue of 50C, since I've already given that you, or let us say, let me give you an example of section 56 to 10, where you have purchased a property, not sold a property. Because when you sell, there has to be capital gains. So still, you have a benefit of doubt that there is something escaped. If you have purchased a property, and again, you are an NRI, right? Now, what do they do these days? You are an NRI, you have not filed return of income, there is a purchase of property. 56 to 10 says that, you cannot purchase a property lesser than the fair market value. So you have received certain benefit out of that, and that has to be added. Now, they don't even write so much in the notice. What do they write? That you have purchased a property, source has remained unexplained. And that is why there is escapement of income. They most of the times, how ridiculous it is. They write 50C/43C/56 to 10. They use all sections wherever there is a difference between stamp duty and fair market value. This is a standard notice which they are sending. Now, if you are not determining, see, every section has a different way of making an addition. If all the sections have same way of the tax has to happen, then why we would have different 5 heads of income? So they are not understanding that information has to be first specific. It can't be vague. You can't just write all 3 sections and leave the assessee to think that under which section this addition is supposed to happen. That cannot happen, right? First is that what in a situation the assessee has purchased also property and sold also property that year, then you don't know whether it is 56 to 10 or whether it is 50C. And in many cases, they just take one transaction because they have this limit of 50 lakhs or 30 lakhs of immovable property. So they don't even look that. Many times, genuine cases, we did not even know why this notice has come, even though they had given information. Most of the times, documents are not given. Only one page ka information is given, that this is the information which we has received from so-and-so party or so-and-so investigation department, and this is what reassessment. Now, what is important here is to highlight that there is nothing which has been shown to prove that there is escapement. Leave the 50 lakhs figure, that we will come to know, that is a different issue altogether. But they do not prove that why there is escapement. Now, just because I purchased a property, did I do a crime? Why am I supposed to do a reassessment for that? So assessing officer is just not doing this. And this is the issue which we have taken in 9 out of 10 cases in the appeals which we have filed. This is a jurisdictional issue, that the assessing officer has not met with the conditions of section 148, and that is why the entire reassessment proceedings has to be bad in law. And this is what one has to take it up in future. Yes. Yeah, they do. No, for the non-resident. Probably, but how would that be connected here? So they would receive the information. That is what you're telling. Okay, no, but yeah, that is also true. So if the but see, this what I have given you example is just a purchase of property. It could be anything else. I'll have to check, sir. I'm not too aware, but I think that is. But you can still make an application under 197 for not for no withholding. Sorry. Yes. No. You can do as a taxpayer. No, and someone can do it on your behalf also. The deductee can also do. So that is yes. Yes. Probably. But sir, there are deeming provisions of assessee in default also in the Income Tax Act. And your point is quite correct, but they don't think whether the information is applicable, where they are going to see whether the person is an assessee or not at all. But it is a very fair and square point. If you feel that it doesn't come into the definition of assessee under section 213, then probably that also is something which can be taken up before the authorities. So approval, what is approval and from which authorities? That is section 151. We'll come to that fairly square and clear section. Second proviso. Now this. Can we apply for? Sorry. Yes, you can make an application for lower or zero tax, zero TDS. Yes, you can. Possible, yes. We have in fact received in few of our non-resident clients. There was no TDS at all. Only if you have to only prove that you do not have any income chargeable to tax in India, or it is below the chargeable limit. So second and the third proviso has been added later on after the section had come into picture. So what does second proviso say? That no approval is required if same is taken at 148A-D stage. Now 148A-D stage is disposal of objections which you are filing. So there also there is a condition that you require an approval by principal commissioner or chief commissioner of income tax. So if an approval is taken at that stage, then you don't require any approval for notice under section 148. Now, why I have highlighted and mentioned the dates? Because right now we have litigation which is going on for assessments which were done before 21, done in 21, in 22 and 23. And when you are going to be there at, because right now it will be all at appellate stage, all will be pending at appellate stage of whatever has happened. When you are defending a client of yours, you'll have to find out you're falling into which assessment year, with which assessment year I mean that in which assessment year reassessment had happened, not the assessment year of the client. So you have to find out that. Why it is important? Because this proviso of no approval came in 1st April 22. Now, if you received a notice under section 148, say on 31st March 22, and there was no approval which was taken under section 148 for issuance of notice, that reassessment has to be bad in law. Because this proviso is with effect from 1st April 22. Same is for the third proviso, because that is with effect from 1st April 23. So it is very important to, because we have seen lots of notices where no approval was mentioned on the face of the notice. There was no approval which was mentioned on there. And that is why if the notice is non-jurisdictional, then the entire assessment is non-jurisdictional. So probably this is a technical or a jurisdictional ground which you need to take up if not taken right now. But this is one thing which one has to be careful, because lots of amendments in different years, and because of which one has to be sure that you know which amendment is following your case. So this is one. Third proviso, this is second proviso. Third is that if a return which is filed beyond the period allowed under this section, which is right now 3 months, or earlier 30 days or whatever days which they give, shall not be deemed to be returned under section 139. Now, this came in the Finance Act 23. Now, what does it mean? So normally a return which is filed under 148, why would it be considered as a return under section 139? It is any which ways, as I mentioned, 148 return is different and 139 return is different. So here the catch is that there is another section which is section 143.2. Now I'll just read the starting line of section 143.2, because that is the reason probably why they have come up with this particular thing. So section 143.2 says, which is a notice basically, that is a section for notice. It says when a return has been furnished under section 139 or in response to a notice under subsection 1 of 142.1, the AO shall issue, then so on and so forth, they shall issue a notice. So what does the section say? That you have to file return under 139 or you have to file a return under section 142.1, notice under 142.1. If you have filed in these two scenarios, then it is mandatory to issue notice under section 143.2. The earlier provisions of section 148 said that for all purposes, return which is filed under section 148 shall be considered and deemed to be considered as return filed under section 139. Now that is the link. If you read 143.2, if you read 148 or 12 provisions put together, that means for every reassessment prior to 21, it was mandatory to issue notice under section 143(2). Now, that wordings are not there in the new law. Apart from that, they also add in an explanation to be very much clear that this return, if you have not filed within time, then it will not be considered as return under section 139, which means that if you late file the return, so the one of the examples which you gave, that portal has been closed, the time was there but they closed it. In such cases, if you don't file, they will consider is that you have not filed return within time, and in that case issuing 143(2) is not relevant. So that we used to always take that jurisdictional ground. We have Blue Moon Supreme Court decision which stated that if 143(2) is not given, then reassessment is bad in law. But now you don't have to wait for 143(2). In most of the cases, when we used to receive 143(2), we used to reply that when a detailed questionnaire will come, at that time we will reply, because 143(2) is basically a formality kind of notice, and they knew that lot of issues are going, people are taking this as a technical ground to go away with the entire reassessment, and that is why this amendment has been made. Again, this is applicable from April 23. So if they have not issued you 143(2) prior to that, then you can't take this ground. Then it is mandatory and you'll have to consider the dates basically. Sorry, yeah. Now, apart from these are the three provisos which were there of section 148. Now there are explanations to section 148, and we have three explanations with section 148. Now, most important, what is in information? So there are 5 categories explicitly mentioned. Now, see the wordings. Information means, whenever there is something which is called as means, it is an exhaustive definition. That means that out of these 5 categories, if there is no other 6th category, they have to strictly see whether it is information under this subclause 1 to 5 or not. So, and this is information which suggests that there is escapement, right? Any information in accordance with risk management strategy formulated by board. Flagged word was there in the original law when it came in 21. They deleted it with 22. 1st April 22, they deleted the word flagged because people started filing writ petitions that nothing is flagged. And they came to know that they can't restrict their scope by writing flagged, because in income tax, there is an internal procedure that, if they find something which is happening wrong or something which is suspicious, they have to flag it. There are different files which are flagged. So they thought that, they will restrict their scope. So probably they deleted the word. The moot question is, what is risk management strategy? Nowhere defined. Nowhere they have specified. There is no circular notification. There is one circular at the end which I have taken up, which suggests, but nowhere 3 years of the law, reassessment law, which has come up, and we still don't know what is risk management strategy. And, I try to ask few people from the income tax department also, DCITs or, CITs, that what is risk management strategy? Is there an internal code in your department? So even they don't know what is risk management strategy. And this is quite critical, right? I don't know. I think someone or the other would have taken up a writ petition on these words, or probably the constitutionality of this section. But if everything is dependent, the entire reassessment section is dependent on one word, which is information, how can you not define what is risk management strategy? So that is something which we don't know, but still, I think most of the cases, since the clause 2, 3, 4, 5 are quite extensive, many times I think 90% of our reassessments come into the other 4 clauses, and that is why it has not been considered. Any audit objection raised, CAG they have deleted. That means any kind of audit. So there are any external audits under 142(2)(a), which is where they have an external chartered accountant appointed. So any those kind of audit objections, which to the effect that assessment has not been made in accordance with the provisions. Now, this is also quite dangerous. Abhi, if you are, suppose take an example, you're doing an audit under 142(2)(a. Okay. Now, whether that person or whether that chartered accountant would be competent enough to see that it is not in accordance with the provisions of the act. So there is a lot of responsibility which is given on that auditor to find out that it is something which is not in provisions. You have to see the entire act, that whether there is one particular thing in the return of the assessee, or if no return has been filed, and whether this information has any link to not doing anything as per the act. So again, lot of uncertainties of how this see, it looks very good when it is written, but practically how are they going to make it effective is something which God knows. I don't know how they're going to make that effective. It becomes difficult for, and even CAG for that matter, or even the auditors which are there in the income tax department, most of them are auditors for some specific purposes, and they are not auditors for testing whether Income Tax Act is properly seen or not. So that's one thing. Third is any information received under agreement under section 1990A. 1990A is what? Double taxation avoidance agreements. So if you're receiving anything through mutual agreements or anything, so suppose, there is this, we know there was a leak of Panama papers. So if there is some leak of those kind of papers, can they do under this clause? They cannot do. So any information which they are receiving from leak of anything, or by some other sources which are not recognized sources, it cannot come under section 148, this clause. Why? Because this says agreement under section 90 or 90A, it has to come officially. So if the USA authority is officially giving me certain documents based on the DTAA signed, and I'm receiving that document, then I can do 148. But if there is some paper leak at some multinational corporate, I can't bring it under this particular section. So that is something which one has to, keep in mind. Any information, this is the most important one, because सबसे ज़्यादा reassessments we get because of this clause. Any information made available under scheme under section 135A. 135A is faceless collection of information, or it is e-verification scheme 21. It was introduced in 2021. E-verification scheme had come hand in hand or in parallel to introduction of AIS and TIS information. So basically we have a verification portal, which from the income tax portal, it gets you into the verification portal. And in the verification portal, there is AIS and TIS information. Now what you need to do, you have to check that whether that AIS, TIS is correct. If it is not correct, you can oppose and you can file a reply. After filing that reply, if they are convinced, then everything good. If they are not convinced, it directly empowers them to issue you a notice under section 148. That is what is connection with e-verification. Most of the cases, most of the time, still since this system is quite new, assessees and chartered accountants, they ignore the verification notices. So one thing which I would like to say, because most of the cases which comes to me are those cases where we got an opportunity, but you did not exercise that opportunity. Actually, it was just correction of some information, but you did not do that. And then directly 148 comes. Now, let me tell you one thing here. As I told, section 148A we have, right? Wherein they will issue you notice, you will given time to reply, and then they will pass an order. That entire procedure is not applicable if the information is received under 135A. We will come to the exceptions. It is there in the section itself. Why it is not applicable? Because e-verification scheme is made in such a way that it is inbuilt, giving you an opportunity. So they are not going to duplicate the process. They are already giving you an opportunity in the e-verification scheme that this is what we found. Look, you file a reply and say whether you agree or you disagree. And if you don't agree, then you give the reasons why you don't agree. So it is giving you an opportunity. Now, again, they are not going to give you an opportunity. So the moment they don't agree, now the fallback of this is that since this e-verification scheme is also online, some things are that you cannot, because you are not able to write a complete detailed reply or give some annexures, etc. So sometimes you do not know how to reply to that notice on the portal. And in such cases, what has happened, because sometimes, there are multiple assessees, there are joint accounts, husband and wife, both the cases, there is mutual fund, joint name, both receive it in AIS and TIS. So, you have to give information. Sometimes the assessee ignores that, and because of that, it ends up and lands up into assessment. And so most of the assessments which we get are out of this verification scheme right now, in this year, not in the earlier years, but this year.
You receive a notice for this e-verification, or
You receive.
Inbuilt in the portal?
No, it is there in the portal, but you receive a notice for e-verification, and that is separate from assessments. So that is a different notice.
Then only we have.
Then only, yes. Yes, you receive a notice, you receive an SMS, both. Sorry? They don't consider. Yeah, that is also a very big problem. They are not considering the replies. And another problem with that is that not only considering, but in such cases, in one of the case, we have taken that we were not given sufficient opportunity at the verification stage. Why? Because they asked me A, B, C, D, E, 5 informations. I submitted those 5 informations. Now, out of that 5 information, they did not agree to one of the things which we have submitted. Straight away, they issued us notice under 148 without telling us that, see, there is some confusion. We are giving you again an opportunity. You please submit these details. So if there is lack of submission of documents, then also they will not tell you. If they are not agreeing to something, then also they will. So it's not a two-way system. They are not communicating. We are able to communicate, but they are not giving us any disposal order. Even if they are accepting, they are not telling that they are accepting, because that is also required. Why? Once, because obviously we don't have change of opinion and all those things right now. But if it is been accepted, so after 5 years, if the assessing officer wants to do assessment on this, I can say, I have an order that you have accepted it. This information was accepted and I have submitted it earlier. And that could be a very good ground for you at the later stage. But they are not giving you anything. And they are straight away issuing you notice under 140. The only thing right now which is in our hands is that to make a proper reply to verification notices and not ignore that. Because we did meet with the principal commissioner who is in charge of e-verification scheme, the criminal and investigation wing principal commissioner. And we talked to them and we submitted all these issues. So they told that since this system is raw, and what happens is, once, suppose, as I gave you example of mutual fund, right? Where there are 2 parties, your husband and wife, and you are a second name. Suppose I'm the wife, I'm second name. Actually, the mutual fund has to be taxed, or has to be, the source has to be found in my name of my husband. Now, when I reply that, what do? Is they go back to the source who has submitted the SFT information. They just don't directly, based on my documents, they conclude it. So they go back to the source, which is the mutual fund house who has submitted the SFT. Now that mutual fund house, they will clarify and they will find out. They will see the records of my husband, C26 AS or AIS or TIS of that particular assessee, and then they will remove. So they told me that they also have around 4 to 5 months gestation period to do that. Yes. 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 Yeah, in most of the, so now for joint accounts, no, more or less they have understood. But this is not only with that is one example. But now details are also with respect to any foreign account transactions, or probably any bank account transactions. If there is any immovable property where, sometimes the name is just the wife's name, or the second name is, or mother's name is just taken for the sake of it for the agreement. So all those cases you have to specify. In most of the cases, what happens is, in one of the case in SFT information, I think all of you would have faced it sometime or the other. They duplicated the immovable property transaction 5 times. The 2 crore property, 10 crore transaction on SFT details. And we told them that there is only one property, and how can I purchase same amount of property 5 times? It's like, it doesn't beat logic also. So we told them, we explained them. But these are also the disadvantages of using technology, because unless and until it is not corrected by the SFT person, they are not supposed to take any action. So it is the SFT has to be revised by the person, and only then they will take that action further. Yes. Yeah, we can check also. But that will be like checking almost every week or on day-to-day basis. But at least even if we notice the notice, that itself would be good enough. And I think for that, all of us as chartered accountants need to educate our clients to do that. Because, somewhere or the other, I have seen that system, that they are so much reliant and so much dependent on us as CAs, that we are rather, if something goes away, they will blame it on us that you did not check. We are not supposed to check for hundreds of our clients that whether something is coming or not. So they need to be made responsible that if you receive an SMS, do not consider it as fake. One of my client did not send me, or he says me, "Are ye to fake message aaya tha department se." I have not done any transaction, because they hide actually. They don't even tell us what is the true transaction which they have made, because they don't want to show all their financial transactions. So, but one has to pay with it if it is not replied to. And the 5th clause is that any information which requires action in consequence of order of tribunal or court. So if there is any other, suppose there is a penny stock transaction before a SEBI appellate tribunal, and there is a judgment which is against you as one of the beneficiaries of penny stock. If that information is coming up, then it will come up under section 148, direct issuance of notice. Explanation 2. Now, this was 5 criteria which we have to remember are the criteria which are set in the section. Now there are deeming provisions. Like we had in 148 earlier provisions also we had deeming provisions. Here also we have deeming information. What do you mean by deemed information? So in 4 of the following cases, now this is where they are incorporating search and seizure provisions. So when search is initiated under 132, where the survey is conducted under section 133A, other than 2A. 2A is basically TDS section. So basically they are not including that. When AO is satisfied that now point number 1 and point number 2 are quite normal, survey and search. In the case of assessee, 3 and 4 are important. AO is satisfied. Now the word satisfied is used only for 3rd and 4th. Yahan pe they have to record the satisfaction. Okay, if anyone remembers, we had recording of satisfaction under section 153C, where you are doing, suppose if I am the search party and there is some record which they have got on my case, and there is some other party also which is coming because of me, because of search at my premises. So I will be assessed under section 153A. That party will be assessed under section 153C. And whenever there is 153C, the assessing officer will be many times different because those are 2 different parties. So when they are 2 different parties, the assessing officer has to record a satisfaction note that I am satisfied that these details are pertaining to this particular assessee and there is some incriminating. So we had incriminating material at that time. Now those words are deleted from this section. But that satisfaction note was there. I think those provisions are still there by way of clause 3 and 4 of explanation 2, and one needs to insist on satisfaction if there is a search and seizure case, especially when you are the 3rd party, when you are not a search party. So AO is satisfied that any money, bullion, jewelry or valuable article or thing is seized. So this is all tangible. Okay, this is all tangible. This is not information, because right now what is happening is they suppose there is some racket which is happening in Kolkata for a penny stock, and there are 100 parties, or there's some client modification racket which is gone, and there are some 500 parties who are part or beneficiary to that client code modification. Now search has been made on that particular party. Ideally that particular party ke liye this law is applicable, that section 148, but I'm just one of the person whose name is there in the material record. That is information, that is not seizure, and that is not considered here. So one has to think that whether if anything has been seized. And 4th, AO is satisfied any books of accounts, documents seized under section 132, 132A pertains or relates to assessing. Now, the example which I gave you right now, that there is some scam or some racket which is unearthed, and you are one of the beneficiary party. Your name is there in the Kacha notes or books or something. You get dragged away in section 148. And how do you get dragged away? You get dragged away because you are not given the powers of section 148A also, which means they have the right to directly reassess you. They will not give you any opportunity that you explain. So in one of our case, what had happened is that there was one party which had been searched. And because of that search party, there was some loan which I had taken from that search party, and they considered that it is a bogus loan. And we received a notice under section just recently, a month back. We received a notice under section 148A that you have, these are all the search related documents. Your name is there as a loan beneficiary. You have taken loan. Explain why this is not bogus loan, because that person who was searched has accepted that it is into accommodation entries. Now, meantime, while we were making a reply, we received another notice, and that notice was notice under section 148 directly. Before the due date was expiring under 148A, they issued me directly 148 notice saying that, file the return within 30 days. Now, we were like that, why are we receiving 2 notices, 148A and 148? The reason is subclause 4. Ideally, they did a mistake. They never should have issued as 148A. They should have directly issued as 148, but as I told that they are not aware about the laws yet. even we are coming into terms with the law. It's quite complicated what they've made. So they were not aware, and that is why 2 notices. Obviously, we will fight that, since they were not aware and there are 2 notices which are issued, we've not got opportunity. But ideally, if you receive a notice, just because your name was there as a party or you have taken some beneficial loan, don't be surprised that you are directly receiving notice under section 148. You will not receive 148A. You will directly receive under 148 because that is what the section says.
They are supposed to provide investigation.
Yes, they are supposed to. That information they are supposed to give. That everything they have to give, and if they don't give, you have a right to ask. So that they have to definitely give. Yes. 148, the later one. That is what we presume, but we replied to both. We replied to the earlier one also. They are not. And I think gradually in another week or so, we have not checked yet, but I think they will even close that. They will close it on the portal because they know whenever they have, in CIT also recently there were duplicate proceedings. They used to start closing so that there is no confusion. So they will close it down. For now, these are all search related cases for where the search has been initiated or survey conducted. Now, there was a line which I have deleted here, which is 3 assessment years immediately preceding the relevant assessment year. Now, this amendment they have deleted in 2023 with retrospective effect from when the law had come. Now, what does it mean? When it was drafted in April 21, at that time, they told that in all the search cases, you can issue notice for 3 assessment years. Okay, so we were wondering why 3? Earlier law, 7 years. Under reassessment, 3 years and 10 years. So why not 7? Why not 10? Why 3? Especially when it is a search related case. So I think probably we were wondering that why it has happened. Rightly so, they have deleted. Now, but because of this deletion, there is a problem. Now, because of this deletion, what do you mean? Does it mean that if there is a search case, they can ask you suo moto, it becomes 10 years? Because since they have removed that limit, that means they can do for 10 years. Another beneficial interpretation which I would like to take is that since they have not mentioned, and the logic says that whenever there is a law which is being done, it will be applicable only for that year. So since they have removed any time limit, so that means that whenever a search is happening, they can reassess only that year in which year the search had happened and not any other earlier years, unless it is a connected matter. Because we have that law which is there under section 149. I'll come to that. But unless it is not connected. So suppose if today search has happened at my premises and they have found 20 crores cash or something like that, they can then reassess only this assessment year, and they cannot touch earlier assessment years because they have removed the word 3 years. This is one of the logical explanation which could happen. If they want to do for any other earlier years, they can still do. They can still do it because the law says you can do up to 10 years, but that has to be different information. That cannot be search information. They cannot say that search hua, that is why I'm doing assessment. That cannot be the information. There is some different information they find and then they do it. So nobody stops that. So this is one thing. This is quite complicated. I don't know why at the first place they added 3 years. What was the logic? And why did they remove it later on? And explanation 3 says that everything has to be done by a specified authority under section 151. So this is just sanction which is there under 151. Now coming to section 148A. Now this is our main section, which was an outcome of GK and Drive Sharp to certain aspects. So there are 4 parameters or 4 procedures which they have laid out. First is that they can conduct an inquiry with prior approval if required. So before sending you a notice, subclause A says that they can conduct an inquiry. That is this inquiry karke they can leave it and get it done with that. Hardly we see that there is a notice which has been received under subclause A. Basically, they are not using that. We directly receive notice under subclause B only. B says that you are supposed to give an opportunity by serving a show cause notice. Here also with prior approval was there, they have removed that. Now that words have been removed, that means for 148D, any assessing officer doesn't require an approval for principal commissioner. Approval has been shifted. Approval is required only when you pass the order under subclause D. But at the subclause B, while issuing a notice, I'm an assessing ITO, income tax officer, or an assistant commissioner. I feel that I've received certain information. I will send you notice. I don't require any approval. Earlier, there was approval under 148. Now they have removed it. They have deleted that words by not giving less than 7 days. So again, why I've mentioned 7 days, 30 days, etc. Because every case you have to check whether you were given enough time. 7 days, normally whenever they are giving days always means working days. So if you're getting a notice on Thursday and they are telling you to make a reply by Monday, you have to take a ground that you were not given 7 days as per the law and the notice is not correct, because Saturday, Sunday is not working days as per income tax. Or if there is any public holiday, you have to remove that, right? So they have to give us minimum 7 days, but not more than 30 days from the date of issue, and adjournment can also be granted at this stage. So if बहुत सारे cases, I think most of cases जिसमें they did not give adjournment, and these we have writ petitions. I have given a summary of decisions towards the end. You can read it at ease, where they have allowed that, nothing doing, law says adjournment you can give, then why are you not giving it? So they are supposed to give you adjournment. Consider C is very important. It says the assessing officer needs to consider the reply which you have filed. Now, why they've mentioned this? Normally it's common sense, no? They have to consider. Why would they mention it? This is an outcome of GK and drive shaft, because many times they don't apply mind. They don't consider what you have. They just see they are bent, strong bent that they want to make an addition and they want to do reassessment. So C is specifically brought into law by way of law itself that they need to consider. They decide. D says, now D is the disposal order basically. Decide on the basis of material on record, including reply of assessee. So here there are two things which the person has to, assessing officer has to do. Consider my reply and also information which is there. So once an information has come, that per se does not mean that there has to be reassessment. Once an information comes, if I don't reply, if I don't file a reply, then what? Can the assessing officer straight away pass a disposal order? No. The assessing officer has to consider his own information. He has to find out. This is something like the provisions of best judgment, where assessee does not make a reply. But does it mean the assessing officer can dismiss the matter? No. The assessing officer has an additional duty when the assessee does not reply to look on the information and then pass a reasonable order. The order has to be reasonable. It cannot be one-sided. It cannot be biased to the department. So, and find out whether it is a fit case to reopen or not. And here the approval is required. So earlier stage at subclause B, they removed approval. Here the approval is required within 1 month from the end of the month of reply received, or when 1 month from the end of the month expires, whichever is earlier, if the reply is not filed. So this is the clause. Here also many times when you receive an order under section 148 AD, please read the dates. Because many times we have seen that they delayed, they don't file within 30, they don't pass the order within 30 days. And if they have not passed the order within 30 days, then again, they can't issue you a notice under 148. So these are all technical issues, but one has to see when, when your merits are not strong, this is what saves you. So this is what you need to look into. Now, yes, it is an outer limit from the end of the month in which notice has been issued. So not 30 days from the date of issue of notice. So suppose, yes, you have to from the completion of month. Yes. So suppose if you have received a notice on 25th March, then it will be 1st of 31st. So it will be 1st of May. That will be 1 month. That is how it will be from 31st or 1st of April. That will be 1 month. 148A. Yes. Yes, yes. Yes. Yes, yes. From that subclause B. Yes. Sorry? No, they have to pass the order because already a show cause 148D is considered as a show cause notice. So they will not communicate further. It cannot be two. They will communicate. Acha, okay. Okay. So I think we just see the wordings including. I think it is passing. It is not service. Because they have not, because wherever in the Income Tax Act they want to be clear, they have used the word served. In this section in 148 AD, they have not used the word. Yes. By passing an order. It says, the section says passing an order. That is their inherent right. They do that all the time. They do that all the time. So it's not something new to us, basically. And they can do it. Correct. Yeah, that's true. So it's not fair, but yeah, I do understand. So now coming to exceptions to section 148A. Now this entire procedure which I narrated, which is 148A, which gives you opportunities to reply, there are 4 exceptions to it. So as I mentioned, search cases are exceptions. Search in case of the assessee. Survey is not mentioned here. Okay. वहां पे survey था, search and survey. यहाँ पे they have not mentioned survey. That means for survey, they will have to do 148A. So do a distinction whether it is a search or survey. Second, whether in case of, so first is in case of the assessee. Now B is in case of other assessee, but there is something which has been seized of yours. So suppose search has not happened at my place, but my books of accounts were there at my chartered accountant and chartered accountant was searched, suppose. So since my books were seized, I will fall into clause B. So for that also it is not required. Third is when AO is satisfied, the pertaining information which we talked about. So if the AO is satisfied, then you, if it is relating to you. And the fourth is 135A, which is the verification, which I mentioned earlier. That if it is under e-verification, it is coming under exceptions to 148A, and that is why they don't have to do 148A. The reason is they have already given you opportunity at the earlier stage. Section 148B is, I think, just saying that in all these cases, since these are search and seizure related cases, mostly it has to be Joint Commissioner of Income Tax or any other above authority. So normal ITO or a assistant commissioner cannot do such assessments. So you have to check those when you receive the notice. If you're receiving a notice from anyone lower rank of JCIT, then jurisdiction is an issue. So that has to be checked. Sorry?
Books of account is seized.
Yes.
It means those in the wording.
So, sir, thing is there. If it is considered in thing, then probably. Valuable article or thing. Probably not, I guess, then. Not specifically mentioned. Private approval that books of account. No, books of accounts, whether it comes as valuable thing or not. I think it should not be. What they mean is, because since you have to read the meaning of the word with what is connected written. So ideally, if it is money, bullion, it could be car or any other such valuable article or any artifacts, etc. It should not be books of accounts in clause B. So section 149. Now this is a section for time limit of notice, 3 years and 10 years. So you can do it for 3 years. There is no bar, no condition. Up to 3 years can be done from the end of the relevant assessment year. For 10 years, you have 3 conditions. If the assessing officer has in his possession books of accounts or documents, this is, I have not highlighted, but this is very important. There has to be in possession of books of accounts. A normal entry asset expenditure is not relevant unless there is nothing in possession. So possession of, and these wordings are coming from section 153A. Section 153A, which was the earlier search and seizure section. There was written possession of books of accounts, and these wordings also go along with section 132B, which is the search and seizure procedural section. So it says that the AO, when receives any possession of books of accounts or documents and which reveals that income chargeable to tax represented in form of asset, expenditure or entry or entries in books of account. Now, second and third got introduced with effect from 1st April 22. So you will have to again see the dates whenever it is happening. Asset, expenditure, entries is not explained. Only what is an asset has been explained. But what is an entry or what is an expenditure? So I think you have to just take the common meaning of expenditure and entries, okay, which has escaped assessment. So here also escapement of assessment is very necessary. Just because, there is a possession in books of accounts or there is an asset which is more than 50 lakhs. So they are again keeping their checks that escapement is important, and that has to be brought about by the assessing officer, that there is an escapement on account of these assets. What is an asset? They have mentioned asset includes immobile property, shares, security, loan, advances, deposits in bank accounts. Now, here the word is includes and not means, which means this is an inclusive definition, which means that anything else also, if it is under normal parlance, if you can say it is an asset, then it is an asset. So suppose example, intangibles. If intangible is an asset, if you have a trademark or a copyright or something like that, then it is an evidence, then it comes under the asset definition. But does a loan, share security or shared account which you have, does it form under asset? No, it doesn't, because it is a liability, and liability is not mentioned anywhere. It is only covering assets, expenditures. Only thing is third category, entry or entries in books of accounts. So that third clause is very wide because it includes everything. Entry in books of accounts, sari entry can be included in therein. Okay. Now, first proviso, there are two provisos to this. First proviso says that no notice can be issued if it is being time barred as on 1st April 21. So this is fine. This is the controversy of Ashish Agarwal basically. And it helps, this proviso helps in all the cases where your assessment was reopened for 13-14, 14-15 and 15-16 assessment year. So I'm not taking that controversy here because that is a different controversy altogether for all our pending cases. But just to put on record, and I have also given decisions in the presentation towards the later, for assessment year 13-14, 14-15 and 15-16, if your escapement or your asset, because at that time it was only asset, at that time it was not expenditure or entry. So if that time, if your asset is less than 50 lakhs, the assessments are invalid. There is Gujarat High Court, Allahabad High Court and Bombay High Court in pipeline, which is in favor of the assessee. So although all those cases are right now before appellate authority, but whenever you are making submissions, the first ground should be covering those decisions that this assessment is not valid. So this is with respect to that first proviso. And the second proviso says that the section is not applicable if the search is conducted before 31st March 21. So this is because the section was introduced with effect from 1st April. This is a new proviso. Just in short, I will tell you what is it. This is just for administrative difficulties. So what they say is that many times, the search has been initiated and it is falling as on the financial year ending. So what happens is that the assessing officer just get 15 days or 7 days to make, because it is search related information. So the time is very less to issue notice. So in such cases, they will exclude that period. This is basically that you will give another 15 days period if the search execution process has completed as on March 21, as on any of the March, basically. So this is just administrative reforms, nothing to do with legal provisions. And the fourth proviso, again, this proviso has been added with effect from 1st April 23. So this particular proviso is basically just stating you that any information which is given in explanation 1 or documents which has been impounded in case of search or requisition or survey, survey is not mentioned, any search or requisition, then again, if it is done after 15th day of March, then period of 15 days shall be excluded. This is again another administrative reform. Just wanted to put it on record. Fifth and sixth proviso is something which is related to injunction. So if there is High Court writ petition filed, then you remove the period. Is basic provisions which we had earlier. 149(1) is important. It says that the limit of 50 lakhs, how do you consider? So limit of 50 lakhs is cumulative for all years of assets and expenditure. So which means that if there is a connected thing, if there may be situations where the liability is connected or there is an asset and expenditure which has been, then you will have to consider all the years cumulative, and 50 lakhs limit is not for every assessment year. This is only in case when there is an event and occasion or there is something which is being connected together. So basically for that, you will have to cumulate it, and that is why the scope is increasing basically. 151 is just sanctioning authorities. Who is the sanctioning authority? I think you could just read it. There is an amendment which has been made. Amendment is also saying that if there is a high court petition or there is any appeal pending, then you have to remove that period because that is a litigation period. But nothing much in section 151. I think I'll skip it. Now, critical issues. How much time I have? So based on that, I'll see which issues I should cover. I try to take, so I've just reached halfway of my presentation basically, but I just try to take the most important. Some of them I have already covered while I was giving it earlier. One important thing is, as I mentioned, escapement is extremely important. So in all cases, assessing officer may forget, we should not forget that anything with relating to 147 has to do with escapement of income. And when there is no escapement of income and when there is no loss of revenue, there cannot be reassessment. So there was a recent judgment of Mumbai ITAT where, you know, there were husband and wife, both non-residents, right? And in chartered accountant did a mistake. Husband ke badle wife ke return mein he showed capital gains on sale of property. And Mumbai ITAT, you know, delivered that both are non-residents, both same tax bracket. Unless and until there is no loss of revenue, there cannot be any duplication or double addition. And that is why they, you know, held in favor of assessee. And this is, I think, just basic law that if there is no loss of revenue, you should object it at the revenue level. Okay. Then I think income in respect of any issue I have already covered. Reason to believe has been replaced by information. With that, does it mean that the assessing officer does not have to do any additional mehnat on the information? No, it doesn't give a free hand to assessing officer. What I mean to say is that every information also requires mandatory application of mind by the assessing officer, which they don't apply, but it is required. And if you see that they have not applied, because most of the litigation which we have right now with the new provisions is that assessee has made application, has replied to 148A clause B. Assessing officer doesn't read. Actually, they don't read. They just reproduce. One good benefit which they have got out of e-proceedings is that they can copy paste the entire reply. So they will just copy your entire reply word to word. They will put it and then one line. I do not agree to the same and there is addition. Then it's, see, one thing, silver lining which, see, because that is subclause C, no, that he has to consider. So they use the word consider. But the silver lining with bad orders and non-application of mind orders is that stronger is the case which you have. At the unfortunately, you will have to go higher, but you have a very strong case if they have not applied their mind, because then you can, you know, probably set aside the entire proceedings altogether. Yes. 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 Sir, but if that logic per se, you know, if you have that logic, that was always there in the act. Principal commission approval was always required. No, not 143, but 148. 148 always, the section of 151 is hardly changed under the new provisions. The sanction was always required, whether it is now or for 148. For issue of 148. You're talking about under 148 AD, but at the end of the day, when you are making an appeal, you are not making appeal against 148 AD, but you are making an appeal against 147 order. 147 read with section 143.3, you are making an appeal to that order. And that order is not approved by principal commissioner. Only the sanction is given only to go inside. Once it is gone inside, it is everything which is done is by assessing officer. So their CIT, there is no conflict of rights between principal CIT and CIT appeals. Sir, 154 application you can do because 154 says that it is any order can be done. So you can do, but as I had discussed, they don't reply. You can put it on record if there is some mistake in the order, but you will have to be very careful that 154 is only for mistakes apparent from record. So legal issues you cannot take up under 154. But if there is some like this, duplication of amounts of stamp duty value, if something like that is there and they don't, correct. Correct. No, but that they will not consider it as a mistake apparent from record. That is correct. Correct. So he is ignored. Sir, they are willfully doing that mistake, sir. It's not a mistake out of unconscious mind. They're consciously not doing it. So that is the reason. But probably that will not. So then it is good if they say that and you get a disposal. Because if you get a disposal to 154, you can file appeal against that also. But then it's just a long litigation for the assessee, because you, for the same year, you are in appeal for 154, you are in appeal for 147. It's like, you can do such cases only in case where the quantum is quite high and you know that you have to win one way or the other. So you, sorry? Yes. It's just direction, no? Like that in CIT appeal also we have a subsection which says that within 1 year they have to pass an order. But right now 6 years, 7 years CIT appeal orders, they've still not passed. Correct. Yeah, but they don't conclude. See, but in those cases, in one of the case, since you have brought it up, and since, I think this is a problem which everyone is facing. In one of the case, we received an order of CIT appeal where the hearing had happened somewhere before faceless appeals. It had happened physically in 2018 or something like that. And then it got converted to faceless. And we again made submissions. We kept making this, kept asking us notice, and we kept making the same submissions, and they passed order right now. Our first ground before ITAT was that it is not passed within 1 year because there is no change of document. So hearing was already concluded. He just didn't inform that it is concluded. And the time limit has been expired for passing the order. No, but sir, usko bhi 1 year ho gaya. For that also 1 year. See, many times what happens is that you have filed a response in 2020. When Vivad Se Vishwas came, they had issued notices to everyone. At that time, 2020, you filed your reply. After that, there is no communication. Okay. And then directly, if you are receiving an order right now, then it is concluded because there is no fresh notice. Yes, so this is a technical thing, sir. Basically, I would still suggest everyone to fight on the merits, but we don't know that because all CIT appeals are stuck as of now. Probably with time we'll come to know whether these grounds can be taken or whether they are taking. But see, as far as what my experience goes in ITAT, they brush down your technical grounds. They want to look more into the merits rather than your technical grounds. The moment you take any technical grounds, they are ready to set aside your matter to the file of CIT appeal. That is what even High Court does. High Court may, if you say that he has not considered the reply under 148B, they are not setting aside the assessment. They are setting aside to the file of assessing officer to reconsider the reply and pass an order. So there is no point in going to High Court also, frankly speaking, in most of the cases. But that is what they do. So I think let me just, and also I think controversy I have already taken up. Issuance of notice I have already taken up. What is meant by information? So I think some of the cases which I have given here in the past, there are some cases of Supreme Court, High Court, which in a different context has given that what is an information. So probably we can use that whenever you are in a dilemma, whether this could be considered as an information or not. So for that I have given, but I think earlier law and earlier decisions will still prevail, which says that, information has to be specific. Information cannot be absurd. It cannot be vague. It cannot be incorrect. If they are giving you PAN number of some other person and they are putting into your record some transaction, in one of our case, it did happen that same name and same surname of the assessee, but a different PAN. And they had found cash which was deposited. Now I showed that there is no cash deposit. I do not, and salaried person. We had almost 35 crores of cash which was deposited by some other person. Now we have done an FIR before the police because because of this harassment. But this is how it is. So that will not be qualifying as an information if it is not for this particular assessee. You have to see whether it is being signed, in mandatory. This all is just basics, I think. Can 140, I think I'll just take where you can file a writ petition. So basically, none of the orders, 148, none of the notices or orders are appealable. So 148A, B, D, or notice under 148, yes. None of them are appealable, so you can't appeal against anything. But 148A, B, D, and notice under 148, all three you can file a writ petition. But it comes with a caveat. As I mentioned, just because you file a writ petition, it will not make the case go away magically. It will bring to the assessing officer to give him directions that do it properly. But it will not go away unless you're filing a writ petition against information and against escapement only. That there is no escapement only. If that is the case, then probably, but in those cases also, since High Court is not a fact-finding authority, they normally don't do it. So basically, do choose and decide before you file a writ petition. Otherwise, it could be just unnecessary cost to the assessee. This is which I have taken. So one of the dilemma which I have, come across practically is that when they issue you a notice under 148A clause B, they ask you everything. Basically, that is like an assessment only. So you have to reply. Now, question is, where do you restrict yourself? Do you only take legal arguments that there is no escapement, or you full-fledged give all records, ledgers, accounts, bank statement, everything at that stage, and give everything? I would suggest that second thing is more important. Although, you may feel that this is assessment only. Why would I object it when I have to do actual assessment at 148A, B stage only? But in many of our cases, when it started, we did trial and error. In some of the cases, we used to just give legal reply. We used to not give all documents. We used to just negate, and we used to give technical replies. They passed an order saying that since the assessee did not give full information, that is why I'm not in a position to find out whether there is an escapement. So by default, it is escapement. So now what we started is that we started giving all information as if it is an assessment, but we bombard them with information that we have everything, especially when it is a meritorious case. Give everything which is possible. Outcome change hoga, nahi hoga. Outcome may they will still make an addition and still they will issue a notice, but you will make your case and yourself very strong when you go at CIT appeal level. So because that means that he has not exercised his jurisdiction. He has not, see, when you file writ petition, no, it will school the assessing officer to do it again. But when you are at CIT appeal, that time it cannot say assessing officer wapas karo. At that time, it will delete the 148 edition. So always you will always have to see and consider whether writ will be beneficial or an appeal will be beneficial. That is very important, especially when we have seen that there are hundreds of writ petitions filed every day on 148, and we don't understand why it is being filed, because you have an appellate route before you to go, and and sometimes it is more beneficial to you. So yes, I think Purvi, that's it. I can go on and on, but too many issues. But I think I'll show this instruction is something which one should look into, because this is the only thing which I could find with relation to risk management strategy. So this is helpful. Checklist is something which is readable, and these are recent judicial pronouncements. So basically all came in from January to July 23, and these are some other landmark decisions of past, but they still hold good. So yes, thank you so much. Yes.
Considered by assessing officer
Yes.
as a bogus transaction. Loan taken by being considered by the assessing officer as a bogus and considered as an income escape.
Yes, if it is bogus, then it will be income escape, because it will be section 69 income, no? 69, 68, 69C. It will fall into those sections. And those sections, nobody normally volunteers to give that information in the return of income. So it will be escaped. Because but I've given a lot of decisions with respect to bogus escapement also in the recent judicial pronouncement. So you can read those decisions. Yes. Any other questions, or we wind up? Thank you so much for your patient listening.
Thank you, Kinjal, for this very informative, very elaborate session on reassessments. We all can see that the PPT is, I think, only halfway through. So a lot more to go on this. Ji? Yes. Yes, sir. Yes, sir. Thank you so
These
much.
positions require a lot of time actually. So first thing which I told him is 2 hours is very less.
Yeah. So we'll try and plan for more time next time. Thank you, Kinjal.
No problem.
I would also like to thank our today's coordinators for helping us out in the arrangement of the meeting. A big thank you to all the participants for coming here and attending the meeting and making it interactive. Thank you all. Thank you so much. We now close for the day.